Hi, I just wanted to go over really quickly some data regarding mortgage rates, what they have done so far during the government shutdown, and then kind of what we're expecting them to do as well after the shutdown is over. Also, we are experiencing a big Amazon or AWS outage today, and that's causing a lot of data to not show up properly, and a lot of systems are down and things like that. So a lot of people are having issues. We did just get the rate information to come up here a short time ago, so we're kind of monitoring that right now. And I wanted to go ahead and share a screen so we can get into what we're expecting, what's happened so far, etc. here. So bear with me just a moment. You should see it coming up right now on your screen. So anyway, this is the 10-year Treasury, and it kind of moves with the interest rates. So as you can see, once the government shut down back in here, we did actually have it go up some, and now it's come back down, and we're actually at the lowest or near the lowest levels we've seen. And shutdown's been about 20 days, I think. So when you look back, that would have taken us back to probably around September 25th to 28th, something like that. I don't remember when it actually shut down, but somewhere right around here is when the government shutdown happened. And look what the rates have done since then. They've actually come down, and that's what is normally expected during a government shutdown, is that the uncertainty and things like that in the market, as far as the stock market, causes people to invest in something more secure. And that's why rates have improved, is because they'll invest in the long-term mortgage bonds, and that causes the rates to drop. So that's what's happened here, as you can see. Now, what we're kind of expecting, once the shutdown ends, you'll see the rates jump back up a little bit, because the uncertainty ends and people start investing in the stock market again. So that's a possibility. But there's a lot of other factors that can impact things as well. One is that several of the reports that impact interest rates have not come out yet that would normally have come out because of the government shutdown. They couldn't generate those reports, like labor reports and jobs reports and things like that. So as a result, once the shutdown ends, we will see, I expect there'll be a slight tick upward immediately afterwards. But once those reports come out, we kind of expect it to go back down some, because we think that the labor and jobs reports are going to be poor or negative for the economy. And if that happens, the rates will come back down, and we might be getting down into this range, possibly even below this range, once that happens. So that's what we're kind of expecting right now. I would just hang on, and things are going to probably improve within the next month. Depends on how long this shutdown lasts. I believe they'll have to end it this week at some point. They can't just keep this going on forever. So if you hang on, then next week or the week after, we may see rates down in here. And so for those people who are looking to purchase right now or refinance right now, it's a great time, because we're going to be at the lowest. If this happens and this data that comes out from these labor reports and jobs reports end up being as negative as we expect, we could see the lowest rates that we have seen yet within the past 3 to 4 years. So anyway, just stay tuned. I'm going to keep updating as necessary, and I just wanted to go through that very quickly here. If you have any comments or questions or anything, feel free to let me know. I'm always here to help. Thanks.